Bitcoin has seen an explosive break over $60,000, resulting in over $700 million in liquidations. With the monthly candle just around the corner, has Bitcoin got its sights set on a new all-time high? Let's go ahead and jump in. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. Bitcoin has seen a phenomenal move over 60,000 US dollars, resulting in quite a large amount of liquidations, coming in at 700 million. In today's video, we're going to be discussing the implications of this move in respect to the short-term price action, the weekly price action, and the macro price action, going over the 4-year cycle, how the charts are developing from a technical perspective, and exactly the key levels you need to be paying attention to catch the next moves. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, join us on Telegram. It is the third link down below. You'll get access to updates, charts, analysis, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in taking your trading to the next level, you can join our VIP group. We post trading setups with exact entries, exact targets, exact stop losses, trade justification, and exclusive analysis. You'll also go ahead and get access to our group chats, our general chat, our trading chart and education chat, trade setup, news, daily video, and help chat. If you're interested in getting access to all of that, go ahead and contact us in the pinned comment of the free channel. You can contact me by clicking my name. You can find out our entire trading track record, and you can watch a short video on what the VIP is. Go ahead and check it out if you're interested. Let's dive into a video. So like we said, Bitcoin has seen a massive 24 hours. If you paid attention to yesterday's video, we were discussing this particular range, and a lot of people yesterday were expecting a correction from this range, but what we noticed on the chart is something we've noticed happen over the last couple of weeks was, once again, we saw bullish absorption develop. And this is simply when we have a range of price action where momentum is falling and we are creating higher lows. This is indicative that the selling pressure from this level of resistance is being absorbed by the buyers, and eventually we generally see bearish exhaustion, which then facilitates a continuation upwards. We traded this one in the YouTube channel. We traded this one on the Telegram. So if you caught that one, congratulations. But Bitcoin has done even more than we expected. We saw a huge move upwards, pushing us past that 60K target. In fact, resulting in a large liquidity grab to 64,000. So we'll come back to this in today's video, discussing what we expect next and what this means. But let's go ahead and jump over to the market data. So 24-hour volume has seen a massive jump to 361 billion, up 83%. With that, 24-hour liquidations are sitting at a massive 732 million, with 338 million from long positions and 394 million from short positions. This immediately tells us that people were, one, expecting a correction from this range, and two, massively FOMO'd in on high leverage longs once Bitcoin crossed that 60K mark, that 61K mark, and then we saw this massive correction as Coinbase went down or something, resulting in a massive liquidity wipe across the market. Moving over to the broader markets, taking a look at the DXY. Again, not too much change here on the DXY. We have seen that short-term breakdown that we saw on that uptrend we've been holding for 2 months. Momentum has flipped negative, and the price action is steadily moving into a short-term downtrend. We still are expecting a retest of 103. However, it is taking some time. Be patient and watch that play out. If we do see any sort of retracement upwards, or should I say move toward the upside, again, this area of 105 to 105.5 is a major area of resistance. It is unlikely we are going to break through that before we retest these local low points. Moving over to the S&P 500, we did see that weekly candle close actually nearly come in with 1 day and 23 hours remaining under that 5,100 level. Again, guys, not too concerned about what happens in this range over here. It is more important the weekly candle close actually occurs above that 5,000 psychological level. If we do break below this level on the weekly and close below that level, that could result in a short-term correction developing for the S&P, which could take us to retest that prior all-time high. Remember, even if we do see that short-term correction, that will be considered a healthy retracement before a continuation toward the upside. However, of course, as we all like, we would much prefer to continue upwards, but sometimes we do get these corrections. So it is always good to prepare and plan and to be aware of the potential impact that we could see on the charts if that does develop. Moving over to the Dow Jones really quickly, we can see again potential deviation occurring here over 39K. We have 1 day and 23 hours to close that weekly. We're definitely watching out for that weekly candle close. Not too much of a concern unless we do close a weekly below this prior range low, which is sitting around 37,700. If that does occur, we could then expect a retracement towards our prior high before again a continuation on the macro scale upwards. If we do close a weekly above this level, that could indicate a continuation to 40,000. So all in all, looking strong on the high time frame. On the short term, we are starting to see some exhaustion. Again, whether or not that exhaustion develops into a correction is going to be determined based on where these candles start to close out. So pay attention to that. So a quick summary of what we're going to discuss today for Bitcoin. We are going to discuss the short-term price action, what is happening here in the short term, what we expect next, and how the trend is starting to shape up on the short term so you can catch or look out for the next moves. We'll also be talking about the most important levels on the short term to be watching for corrections or for continuations. We're moving over to the daily/weekly chart, going over the high time frame levels of support and resistance, the next high time frame targets, and potential contextual directions of which Bitcoin could undergo based on supports and resistances. We'll also be discussing the break above our monthly high at 61K and what this means for Bitcoin. And then we'll be finishing up on the monthly charts, discussing the 4-year cycle, what is happening on the price action with just 1 day and 1 hour remaining on the monthly close, and going over some key technical indicators that are suggestive of massive high time frame strength. So before we get into it, a quick word from Bitget and BingX and we'll dive in. I wanted to briefly interrupt today's video to discuss the 2 exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay team, let's go ahead and get stuck into it. So let's go ahead and start off on the monthly charts. As we can see, this is going to be our monthly Bitcoin chart, and we have just 24 hours exactly 24 hours until that monthly candle close. So it is looking fantastic. Now, if you remember back to the channel, we have been discussing this for, I can't even tell you how long. More than a year, we've been talking about the significance of a monthly candle close over 48K in regards to the official start of the bull run and that parabolic phase. So let's take a look at the significance of 48K and why it is important. If we look at the chart over here, we have got our dotted trend line. So dotted trend line in this instance is going to be that 48K level. We can see the dotted trend line is a yearly level of resistance and is originated from the dead cat bounce high of the prior bear run cycle. So we have the all-time high set in, we correct, we create a base of support, and we bounce to create a new higher, a lower high, sorry. That lower high develops into a yearly level of resistance, which again is reflected by the dotted trend line in each phase of the cycle. Each cycle, should I say. We can see again that is 48k in this instance. If we look back at the prior cycle, that is around 11,500, and the prior cycle around $700. In all instances, we had the all-time high. We created a yearly base of support. We came up, we created a lower high. That lower high is the dotted trend line. And again, when we break over that dotted trend line on the monthly chart, that is when we really enter that parabolic phase, that almost vertical phase of the bull run cycle. So let's take a look at what this means for the 4-year cycle and what this means for the price action. And they're two very, very different things. So in regards to the price action, what we have noticed in the past is that every time we close a monthly candle above 48k, we do two things. Number one, we never close a monthly candle back below that dotted trend line in the history of Bitcoin, okay? That if you look, that dotted trend line is never retested again. If we close it over here, okay, we never come back close to it. We close it over here, we don't even come back close to it. That trend line is not tested again in the history of Bitcoin in regards to the monthly level. But more importantly, if we look at the trend angle, okay, the angle of the trend, the angle of the trend from the all-time low to the monthly breakout and the monthly breakout to the high shows us that the angle significantly steepens upon that monthly candle close to the all-time high from a 30-degree angle to around a 60 to mid 50-degree angle. That is suggestive of high time frame, okay, prolonged strength in terms of volume, in terms of velocity, in terms of momentum, okay, in terms of all the metrics of strength that were generally assigned to what strength is in price action over many, many months. And that is indicative of what we would call a traditional bull run. So we are definitely entering that bull run territory now. The start of the bull run is definitely starting to develop. And a lot of people are saying, well, didn't the bull run start down over here? No, this was the macro reversal. If you watch back at our channel, like we said, we bought, guys. We were telling you guys we are seeing bearish absorption, a bullish absorption. We are seeing bearish exhaustion at this falling wedge. This marked the bottom for Bitcoin. This marked a reversal for Bitcoin. We bought at 16.5k. A monthly close of 32k, we said, would result in a move to 48k. We told you a break of 48k would result in a move to the next all-time high or the all-time high, and we are seeing that play out. So let's go back to those monthly charts really quickly and talk about whether or not this monthly candle close above that trend line breaks the 4-year cycle. So the concept that a price structure can break the 4-year cycle makes almost zero sense. The 4-year cycle has nothing to do with these trend lines. If I delete all of these trend lines, guess what? The 4-year cycle is still there. These trend lines are simply structural levels on the price action chart. We are watching for triggers to continue in certain directions. The 4-year cycle is going to be the ranges, the distance between this range and this range, the distance between our bear market low and our bull run, the distance between our all-time high and our bear market low. So the assumption that a breakout of a specific horizontal resistance breaks the 4-year cycle makes no logical sense whatsoever, as the 4-year cycle is not based on price, it is based on a date range trend. So the 4-year cycle is still very much intact. What could break the 4-year cycle would be an all-time high outside of the bull run territory or a new low developed within the bull run territory. So an earlier high or an earlier low could in fact break that 4-year cycle, not a breakout of a horizontal level of macro resistance. So what does that mean going forward? Are we going to see an earlier top? It is impossible to say for sure. It is only pure speculation assuming we are going to see an earlier top, and it is pure speculation again assuming we are going to see the cycle play out exactly like we have seen before. And I would actually argue it is totally irrelevant to be answering and even asking those questions, because those questions will not help you decide when to sell or when to take profits. You need to have a leading data-driven, what would say, plan, okay, that you can implement to know when to look to take profits. So I'll show you really quickly what I am going to be doing to know when to scale out. And this may adapt, this may change. I'm going to be using the method, the exact same method I used, okay, to predict and scale out of my longs at the top and to enter the market at the bottom. Again, all this is on our channel. We talked about this for weeks. We talked for weeks and weeks and weeks, maybe even months, developing our strategy to enter and the same thing to exit. So let's talk about what I'll be doing. I'm going to be using a momentum-driven analysis. As always, I'm a momentum trader, so it is only normal that I'm going to be using momentum in the high time frame to help myself exit and scale out of my positions. If I look at the RSI, I notice once we break over the 80 point, we have 7 to 10 months of price action above the 80 point, okay, before we create a new high for Bitcoin. So we drag again the point at which we broke over 80, we drag that to the high point. We can see we have 7, okay, to 10 months between, okay, the 80 breakout on the RSI and then the all-time high print for Bitcoin. So 7 to 10 months from the RSI breakout on 80 and the all-time high print for Bitcoin. You can see that on average, again, that 7 to 10 month period is generally where we see that top for Bitcoin printing. So my plan is to wait for the RSI breakout, count 7 months forward, and then that 3-month period from 7 months to 10 months is where I am looking to scale out, as I would assume the top to be within that period. And that is what I'm going to be using to scale out. As of right now, it might change, but this is a data-driven strategy to help you get out and predict the top. That is not reliant on speculation, that is not reliant on date range trenders, is not relying on ratio analysis, it is not reliant on any of those speculative measures. It is pure data, it is raw TA, it is factual leading information that can help you analyze the discrepancies, okay, or the shift in strength or demand between buyers and sellers on the macro price action. That can help you identify reversals before they develop. So that information right there is literally worth its weight in gold, because in the past we have used this strategy to scale in and out at the tops and bottoms and it's worked perfectly. So we assume that it's going to do so again. Moving over to this chart over here, we can see some massive indicators on the monthly that are really starting to just show us how strong this cycle is. If we take a look at the market cipher A, we have noticed every time, and we talked about this when it did happen, we see a blue triangle print. We saw one a few months ago, okay? We don't cross back below the 50 EMA, okay, until after the all-time high. I'll actually go a step further. We don't create a red cross, which is a cross of a 1716 moving average, okay, until after the all-time high. So what does that mean? It tells us that if we see a red cross, okay, or if we see a break back below the 50 EMA prior to creating a all-time high, it would indicate, yes, the 4-year cycle is potentially broken. We are entering an early bear market. This will be a warning sign for an exit if it occurs. However, what we have noticed in the past is every time we create that blue triangle, we remain above the 50 EMA until we create that all-time high. We print the blue triangle, remain above the 50 EMA until we create that all-time high. So far, we are playing out for a continuation upwards, however high that may be. The next one I want to take a look at is going to be the Gaussian channel. My bad, sorry, the Bollinger Bands. If we take a look at the Bollinger Bands, what we have noticed is we create an all-time high, we break the midline, we break above back the midline, and when we close a monthly candle above the upper band of the Bollinger Band, we enter this parabolic phase towards an all-time high. So you can see we break above the midline after the bear market, we break a monthly candle close above the upper band of the Bollinger Bands, we enter this parabolic phase until the all-time high. That supports the claim of which I made before, which is when we break a monthly close above 48K, we see the trend angle significantly increase, which takes us into this parabolic phase for Bitcoin. Now, if we take a very quick date range analysis, okay, and usually I don't really like to do date range analysis, but we can see from the monthly breakout to the all-time high, we had 14 bars. From the monthly breakout, which was over here, to the all-time high, we had 13 bars. So assuming, okay, this is a big assumption, assuming that this is the monthly candle close, which is likely to occur, we would see between 13, okay, to 14 bars, which takes us to March 2025, okay, April 2025, which will be the all-time high for Bitcoin, that date range. Now, that is going to be slightly earlier than what the 4-year cycle, okay, if we go back to our initial chart over here, let's just rewind a little bit. This chart over here, the days between top and bottom trend would suggest, if we look at the days between top and bottom trend, we see average of 1,064 days, okay, between the low and the high. We saw that in both cycles, 1,064 days between the low and the high. If we were to see that, it would bring us to a slightly earlier top between, like we said already, March to April. That would bring us to around 910 days max to an all-time high. Again, this wouldn't be a left translated cycle like some people are talking about, okay? It would be a earlier than perceived top, but it still would put the top in within that right phase of the cycle. That is enough about the higher time frame, guys. I hope you enjoyed that analysis. We're going to go ahead and jump into the short term. I would like to add some very quick notes. Overall, charts are looking fantastic. Overall, macro chart is very strong. Now is the time to start thinking about exit strategies, not for now, but for like 10 months away. 7, 10, 12, 13 months from now, according to our charts when the top may be in, you need to think about your plan of how to exit. And I always suggest scale out like you scaled in. It is much harder to make a single decision saying I'm going to sell 100% of my portfolio on one particular price point than it is to say I'm going to sell 5% a week for 12 weeks or in 8 weeks, okay? That one big decision can leave you like a deer at the headlights, unable to make it eventually and just holding your bag to the all-time low again, okay? So have an exit plan, okay? Drop the emotions and understand that when you make life-changing money, when you make a considerable amount of money, it is always better to take some out, put it in your pocket, and you can always go again. The market will always be here. The bull run is not the only chance to make profit. There's plenty of opportunities in the market. Do not fool yourself. Let's go over to the short-term price action and then wrap it up. So like we said already, guys, this is going to be that monthly level of resistance. We would absolutely need to see that monthly candle close above 48K, which is very, very likely now, okay? It is ridiculously unlikely Bitcoin crashes under 48K in the next 24 hours. So we can almost validate that, confirm that. So let's just assume that it happened already because it may as well have. The next level of monthly resistance we need to break above is obviously going to be that prior monthly high. A monthly candle above that level validates a continuation to retest the all-time high. And above the all-time high, we are very much in price discovery, right? We don't really know where Bitcoin is going. We're looking for whole numbers, 80,000, 90,000, 100,000, 110,000, 120,000. The whole numbers is areas of psychological levels of resistance. Again, your job is not to say today Bitcoin is going to go to 120. That's not your job. And guess what? If you're right, you got lucky. That is not your job. Your job is to adapt and analyze the real-time data and make the best decisions when those occur, okay? Just like anything, when you're trading in the short term, apply the same strategies to the high time frame and apply that and trade just as you would on the high time frame as you would on the short time frame. Okay, let's go over to talk about this really quickly. Again, this is going to be an area of resistance. So if we fail to close a monthly candle above this level, we could see a short-term pullback. It doesn't really matter if we see a short-term pullback. Any short-term pullback will be healthy considering a hold above 48,000. This is going to be a base of support. Even if we come all the way back down over here, this is still going to be a massive launch pad for a continuation. It is only if we drop below 46K are we in deep trouble. Until then, we are looking fantastically healthy for a continuation upwards. So even if we see a short-term correction from the 61 to 59K range, it will be considered a healthy correction. A lot of people are suggesting we may see a pre-halving correction. I would say that is likely. It is likely we'll see a pre-halving correction. The halving is in about 50 days from now, so we are running risk of a correction within the next 50 days. But however, like we said, that monthly candle close above 48K, it is very unlikely we close a monthly candle below it again. So it doesn't really matter what happens, because the macro trajectory is very much still up. So as long as you remain patient, you look for corrections to buy if you have not bought already, and of course you really zoom your perspective out, you'll still come out on top no matter what happens. So let's talk about the short-term price action over here. Again, very choppy price action. Not all that much I can make of it right now. We do have this uptrending support line that we are potentially going to retest. I'd be pretty concerned if we do lose that. The main key level I would like to hold above is going to be that $60,000 level now, as that has established itself as a short-term and high time frame area of support. The 60,000 to 59,000 area is going to be our key level of short-term support, that if we do drop below, we could see a correction back to 57, which is going to be that prior consolidation range. So provided we remain above this level, we are expecting a continuation upwards. It's only if we drop below 59k, then we are expecting a correction back to this prior consolidation range, where we'll potentially find support before we continue back upwards. Thank you for watching, guys. We have to cut that ending pretty short. We'll jump into the monthly candle close tomorrow, and I'll catch you guys in the next one. Cheers.